Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for January 22nd, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 414 of Crowd Forecast News, and the first live episode of the year. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and the option professor is back to give his current market outlook. So you should be seeing his screen right now, and I'm going to go ahead and turn it over to him.
Okay. All right. Thanks, everybody. And again, quick background on myself. I'm Jim, the option professor. I've been doing in the business here for decades. Educated thousands upon thousands of people at my seminars throughout the country. And I've also traded thousands of options contracts and millions of dollars in stock. So I'm quite knowledgeable and experienced. I'm going to share that with you today. As I always say to start out everything is obviously trading involves a risk of loss, and it's not right for everybody. You should be consulting your brokerage firm that will determine your suitability and your risk tolerance. And of course, past performance not indicative of future results. And I'm going to be providing information and opinions here today, and they're for informational purposes only. This is not advice. Okay, so there we got that out. And so now we can proceed. I'm going to go over quite a bit of information here because obviously I've got a lot of things that I follow, and I'm not exactly sure what you guys are following. If you have any questions on a stock you own or whatever, strategy on options or whatever, you put it in the chat box. I'll give you a hand with that. Okay. All right. I'll give you a basic background here. You know, lately, if you've been reading my stuff, I told you last week that the VIX had gone up towards 15, and there was a big gap somewhere between 14 area and somewhere around 1250, 13 area. And so there was a probability, in my view, that we were going to go fill those gaps. And in order to fill those gaps, the stock market rises. So that was very good input because that happened last Wednesday. And I'll just give you what happened since last Wednesday on the 5-day graph here on the S&P. You see, this happened last Wednesday when we were down here. And so we've gone on almost a 150-point run, filling that gap that I talked about. So that was very good insight on my part that I had shared with you as well. Now, that gap is not 100% filled, and that's why we still have some legs to this thing. But it did go into the gap when it went down to 13 and change on Friday. So again, there could be a little bit more to it, but you know, we'll have to see. Obviously, the lion's share of the big run up to fill the gap seems to have been done. So you know what I mean. To start buying now, obviously, in my view, would not be what they call optimum. What you got to do things, and you want to do things at the right time. If you don't do them at the right time, obviously, you're going to be in a pickle. So I'll explain a little bit on what I'm seeing here. We've got the S&P right now, and I'm looking at a 5-year graph. You see the RSI here was at 70 last time it ran up, and right now it's at 66. So, you know, that's not exactly confirming that this is the strongest market move of all time. Again, somebody told me that a evenly weighted S&P is actually down on the year. So we'll have to see exactly if this magnificent AI is going to take over the world thing is going to last, you know, without any interruptions. And in my experience, everything has an interruption at some point. With regards to the market here, where's our moving averages on pullbacks? 46.60, 45.35, and then 45.03. And then if you got a big drop, it'd be back to 4,200. This long-term graph here that I use is moving. These are all moving averages I use, so I consider them a little proprietary because not everybody uses the same ones, right? So these are the ones that I use. I think they're quite good. So anyway, obviously very strong market, but it's not really being confirmed by the RSI. If you go to the 1-year graph, what do you got? You got high points here at 72 on the RSI, and now we're up here at 67. Again, that's a divergence. So, you know, I'd be looking closer now to see if there's going to be a place to sell it. Like I say, I think at some point, if they obviously have a disappointment on earnings, or if the rates clearly are not coming down, or there's some kind of interruption with oil starting to take off. I'll show you that in a minute. Then the mood could change, and if the mood really changed and take out 4750 and 4700, I would think by the end of March you could see something down in this neighborhood. Not a lot of people are talking like that, and that might make it even a more probable thing. All right, let's talk about the 1 month graph, and that'll be the first signal here. And again, the red line comes in here at around 48.80, and we're a little bit above that now. Now, again, you'd like to see the red line pointing down before you actually get too excited, because again, if it's not pointing down, the likelihood you're going to make any big money is pretty low. So I am patient, right? Patient. And as you can see, patience paid off last week when we got the 1 month to turn up. And it came with that recognition of the VIX needing to fill the gap. So you had the VIX thing going, you had the red line turning up, and that's when you make money. And then you get above what? The purple, that looks great, and then above gold. So this was all systems go, and that's why it's been a great trade from last week to this week. Okay. Now, yeah, well, what about the RSI here? 82, and where are you now? 75. It looks to me like it's going to make a turn up here, but it hasn't shown any evidence. How about on the 5-day graph? You see, then if you're real short-term trading, and it starts breaking under 48.80, you could maybe give a shot at it. You'd have the red line at 48.87 working your way, 48.84, 48.83. So, you'd have a lot of things working for you if it starts breaking underneath 48.80. So I don't know exactly if that's happening right now, but that would be your first indication that maybe this thing could crack. So, underneath this stuff here, you might get these lines pointing down. If you get the lines pointing down, you got a good shot at making a drop. Again, be patient, be patient. The 1 day up here, you see RSIs here kind of peaked out, and then that fifth, look at this. You got RSI at 65, and then you got it at 51, and then bam, right to the downside, right to the gold line. So it's holding the gold line right now a little bit, and we'll have to see if it's going to keep going. The red's kind of turning down a little bit. It's inverted, right? What does that mean? Red's under green, which is under blue. Now you got green under blue, and you got them all underneath the purple now. So again, if we can, get this thing weakening, you wouldn't want it to be back above 48.88. So if you're a short-term trader, it would be what? Possible sale and stop above the 48.88 number if you want to give it a little room, or even tighter than that. So we'll have to see, but that's basically what I'm seeing right now as far as the short term on the S&P. My view is that the Nasdaq and the Russell, just follow along as well, only at different speeds. Different speeds. So let's take a look at QQQ. And again, heavily weighted to the semis and all that kind of stuff. So on a 5-year basis, again, had a high point here with RSI at 74. Now we're way up here at 70. So, that's not a great RSI as a comparison. Got the red line coming in at 400. That's 22 points lower. And let's take a look here on 1 year. 1 year, we had the RSI up here at 72-ish, and now we're up here at 72-ish. So no big divergence. Got a gap there. So that could be a problem. Another gap there. And here you got the red and green meeting up at 406, 407. So if we do pull back, 406, 407 would be a logical neighborhood to maybe go back to. 410, this double high point, could be pulling back there. And let's take a look at the 1 month. And on the 1 month here, it's filled that gap already. RSI way up there at 74. So again, nothing's pointing down. So all you're doing is thinking that it might fill some gaps, gap there, gap there. But again, this is not the great setup. When the red line's pointing down, that's when you get a bigger run. And also when the RSI can break under 40, you'll get a bigger run. Just like when it breaks above 60, as you can see, I'll show you here. You're at 60, and then we break above 60, and we go from 412 up to 424 in a matter of a very short time. So, I watch RSI as well, and I kind of like to be in there during the acceleration phases, because that's where the larger profits are potentially going to happen. Okay, so that's the story, even on a 5-day basis. Again, if it could get underneath the 421 area and get that red line pointing down, then it's a possibility you could come down and meet some of these other levels down here. If you're a day trader, anything going on? I had a little bit of a short-term deal from 423 down here, but nothing really, just meandering back and forth. And again, now, if it can stay underneath 422, maybe you could see some kind of activity, but that doesn't look that great right now. The small caps are all the rage as far as this year's going to be the year of the small cap. That's what they're all saying, right? Let's see what it looks like. Okay, it's above the purple and is here. So right now, you really want this baby to stay above 190 on the IWM. Okay, and if it can stay above 190, that'd be very constructive. It also would be constructed if you can get these lines, the red, the green, and the blue, to get above purple. Because you notice that's where the bigger money's made, when they're all above purple. And that's just not there yet, but it's trying. And at least the first step is to get the whole market above purple, which it's done. And you notice on the pullback, it held the purple line pretty much. Purple was at 189, the low was 187.5, so that held pretty good. And now it's back up at 195. This thing starts getting back underneath 190, gets back underneath 185 and things like that, then that's going to be going back into the soup, and that would at least delay this thing. But it is trying to go right now. There's no doubt about that. So you have to keep an eye on it on the upside. Anything else telling us here? Well, there's a reason why it might be stopping here. Green is at what? 196.63, and look where the high was, 196.82. So it's banging up there, and it's kind of coming back down. Here you got them both joined in at a very important level, 193 ballpark, right? 193. So if you want to be bullish, you certainly wouldn't want it underneath 193. And if you want to be bearish, you wouldn't want it above the highs of today. So those are two parameters that you could work with if you're a short-term trader right now. Let's go over to the monthly. And I am going to say on the monthly here, there's a nice gap there. And again, if it filled the gap at 193 area, that also is where we saw the support on the other charts. That's why 193 is an important number. It's above purple, so it's got to stay above what number? About 192. Yeah, 192. 195. So you want to stay above 195. You start getting under 195, it'll open the door to closing the gap down at 193. Get underneath 193, 191, and it'll start turning stuff down again. So if you're bullish, those are some of your key numbers. 195 to start out with, 193, and then of course the 191.5, that kind of stuff. Okay, so that's the story on the Russell. Again, a lot of people are very bullish on the Russell because all these cuts are going to be coming, and that's going to be bullish. That's what the story is. Again, the story might not always be right there. Well, let's look at the chat. Dennis, not sure I'm seeing references to it too, but there are different. That's a different company event. I don't know what that means. What is this platform X? This is a bar chart, but if you have my indicators, you can put it on any chart you want. So that's not an issue at all. Yeah. So anyway, if you have any other questions on anything else, just please put them up at top, and I'll be more than happy to check them out. Okay, so I'm giving a little update on the stock market. All right, and like I say, it's not an optimum time up here as far as I can see. It could have a little bit more legs to fill in the gap on that VIX. I'm not denying that. But as far as initially just coming in now, good luck to you on that one. Because I was bullish when the VIX was at 1550, looking to get filled, down at 12 and 13. I was bullish, 150 points ago, so it's kind of rough to dust off the checkbook and start getting in now. Okay, so what does look like it might be interesting here? Let's start talking about that. Okay, and the energy market. Let's take a look at what energy is doing. Because seems like the stuff's getting pretty hairy in the Middle East, and that can be a problem. So yeah, I turned last week. I started last Friday for this week's options. I was very bullish, and have involvement in some energy shares. Okay, and so let me just show you here on crude. Um, You see, it came down and tested these areas here, last week on the purple line, and it held. And you can see it popped up here. This is where you got the real buy signal earlier in the week, last week, right? And then you got above the gold, which is important. And then it came down, tried to break, didn't do it. Came down again, tried to break, didn't do it. Now we're trading at 75. So, down here is where I'm trying to make my hits. You understand? I don't want to buy way up here. I'd like to buy when it's cheap, buy low, sell high kind of idea. All right. So that's what I thought. That's what I see. That's my point. Okay. So where did we throw? Well, actually, if the energy shares go, there's so many of them that'll go, it won't be funny. So let's talk about a few of them. This is called Marathon Petroleum. And as you can see, since last week, we've gone from 21 and up to 22. Another one was the Halliburton. The energy servicers seem to be going pretty good. So Halliburton was way down here at 33, and now we're pushing 34 and a half. So that's not looking pretty good. Schlumberger. And they were down in the 47s, and they're 51s. That's the strongest of all of them. And again, last week you look to this Friday's options if you want to play weeklies. Obviously, weekly options are very risky. Obviously, they can and do go to zero. Obviously, you must only use risk capital when you do it. But that doesn't mean they can't be good, because when you buy calls on like Schlumberger, when it's down at 47 and it starts turning up, and you start looking at the calls at the 48 and 49 mark with only a week to go, the premiums are pretty darn cheap. And then basically, if you get a pop to 51, you're going to get a bang on those options. And that's why people gamble, speculate, whatever you want to call, on short-term options. That's why the volume's so big. Why? Because the premiums are pretty small, which means the cash you're going to have to put up is pretty small. Because the leverage is there. Every time you buy one of these options, at 49, you're getting $4,900 worth of stock. If they're only going to charge you less than $100 to have that means you're going to have leverage of 4,900, and you're going to have a limited risk of say $100 if you pay $1 or less. And so that's not a bad that's not a terrible capital out of pocket. Sometimes looking at the other side of the coin on things is where you can get a little bit of a pop. So that's why I like the short-term options, because why? Because they have very low premiums, and that means my cash out of pocket is pretty reasonably low. It has leverage, meaning it's 100 shares on every one you get. And some of them are so cheap, you can do two-sided trades, which is one that I looked at here today, which I'll get to in a minute. But you could do two-sided trades on this stuff down here. In other words, when we're down here at 47 and 48, the 49 or 49.50 calls or the 47 and a half puts, they're both going to be pretty darn cheap going out a week. And then basically, lose on one, but if the other one really bangs for you, you can be net ahead. So, if you don't understand how strangles work, you should go to get a education class from me that I'll talk about at the end of the broadcast, where I explain the uses and risks of options, which I've been doing for decades. So I'm pretty familiar on how to explain it to you. And then, of course, what do you do after you're in it? You might roll the position, or you might stage out of the position. And if you don't know what that means, that's another thing to learn when I discuss options with people. So, basically, there's another one there. ExxonMobil is trying to make a little bit of a turn here. Let me show you why I think that's a kind of an important level on ExxonMobil on the 5-year graph. Yeah, you see that 5-year graph is right there. So, this is a very important area, because if it gives it up, it could go into the abyss a little bit. And if it doesn't give it up, it could be a good value, right around this 96 and a half level, if it can hold. Again, this is all ominous stuff there, though. That's pretty ominous stuff. I was interested in, I'll show you something about ExxonMobil from a little bit longer ago. Go back on the 6-month graph. Um, at the end of last year, we had a high point here on ExxonMobil, and it was diverging a little bit here. You see, you got a 67, and then the next one over 64, and then you went right down to 52 on the RSI. Then the red line started pointing down. You see, that's what has to happen if you're going to be successful on the downside. You got to have that red line pointing down. And so once it did, that opened the door to if you wanted to get on the put side. And as you can see, once it got through blue and purple, it accelerated to the downside. Then look at your RSI. RSI is at 41, breaks under blue, it's at 41, breaks under purple, and it's at 37. So you know you're accelerating to the downside pretty good. And those put options were screaming pretty good. Then you got a nice big rally, but it couldn't get above blue. Another opportunity to consider the put side because everything's pointing down. And so you had another nice little drop here. And this thing basically followed the Green River all the way down. So, rolling in and out of put options during that time was not a bad thing. Now you had an RSI down here at the lows at around 30, and down here you're at 35. So again, that's a divergence, and that leads me to believe that there could be a pop. Could be a pop. The 5-day graph on it is also trying to turn up a little bit here. So we're keeping an eye on it because, again, I think you got RSI here of 31, and then you got RSI of 33, and now the RSI is up to 55. If the RSI on a short-term or any of them basis starts getting through 60, that's how you can sometimes accelerate to the upside. So you got to keep an eye on that. But energy, like I said, I don't want to just talk about NVIDIA. Let's look at NVIDIA. I don't think you need much insight on that one, simply because it seems to be something that everyone thinks is never going to go down. And just to give you a little bit of caution on it, back in back here, it was at $300, I guess, $350, right? And if somebody would have told you it's going to have a reversion to the mean, reversion to the mean means that it's going to revert back to the moving averages. So if somebody told you at 350 that NVIDIA is going to revert to the mean, and they said, where, and you said, where's the mean? And you said, well, it could be at the blue line at 250, or it could be at the purple line at 160, or it could be at gold at 100. And you would say, obviously, you must have two heads, sir. This is the best company it's ever been, blah, 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 blah. But what did happen? It reverted back to all those numbers, didn't it? Okay. And that wasn't a long time ago. You know how long ago it was? It was at the end of 22, not exactly an eternity ago. Now, of course, we are way up here into the stratosphere. And so would somebody say this would be a poster child potential for reversion to the mean? And someone might say that could possibly happen. And where would be a logical place for pullback? Well, obviously going back to the double tops here at 500. And that's also where the red line is. Now, how would you have any idea that NVIDIA might make that kind of $100 drop? Well, you'd go to the shorter term graphs and see if you've got any evidence. Again, there's no evidence here of a drop because it's making new highs, but the RSI is at 81. So here's what I would be looking for. If NVIDIA had a pullback, and then it had a rally, either towards the high or a little bit higher, and that RSI lagged that 81 number, then I would start getting my periscope up to look to the put side, because that would be telling me that it's running out of steam. Right now, it's full of steam, and so that's why you just don't step in front of things like that. 1 month graph, anything here? You've got RSI at 74, 75. Up here, you got RSI at 77, and now you got RSI over here at 76. So there's nothing really there telling you anything other than it's a very, very strong company making good money, and they've got earnings coming out, I think, pretty soon. So they're going to announce probably they're making a whole bunch of money. And we'll have to see if China's a problem for them, because China's stock market is definitely going in the tank lately, which I'll get to in a second as well. But okay, so I went over the energy sector, which I thought was interesting. This is another one I found kind of interesting. It's called Freeport-McMoRan. And basically on Freeport-McMoRan, it is on a ledge. What kind of a ledge? Let's tell you. See all these moving averages coming in right around 37, 38. Okay, So 38, 37, right? Now we go to the 5-year graph. And what do you got there? You've got the traffic jam, 38, right? And so then you go to the 1-year graph. And so it's under the purple line. Now that's not good. So basically, I priced out some calls at 38 and change and puts at 37. And the combination, the strangle, seemed to be somewhat reasonably priced, in my opinion. So you take both sides, and then you go and get a cup of coffee. And you know what your risk is because you bought the call and bought the puts. You got a limited risk. You got a leverage because you got the right to buy 100 shares above at the strike and the right to sell 100 shares at the strike, but not the obligation. So now you've got your fixed risk, you got your leverage, and now you got this thing sitting on a ledge. And what you want to hear is something that would make the market make a decision that it's either going to go into the soup. And how far in the soup could it go? Nobody knows, but this is a big gap here between 34 and 34.50. Or there's another gap up here between 40 and change and 41. So there is a couple of gaps there that might be an attractor. And you can see on a bunch of different time frames, it seems to be on a little bit of a ledge. And down here, it is diverging on the upside here because you watch this, you got 15 on the RSI and now you got 35. That's a huge divergence. So again, it may bang to the upside very quickly, but you can build a case either way. And that's when you start investigating the strangle, particularly when the premiums, in your opinion, are low, because you are planning on volatility to hit and obviously make one side or the other jump dramatically in price on the premium. And that means you can afford to take a little bit of a hit on one side because, if you're wrong on the one side you want to pick, it's nice to have a hedge on the other way, particularly if the hedge doesn't cost a heck of a lot of money. Okay, so that was something I thought was pretty interesting today, and I thought I'd bring that to your attention. Again, I'm just sharing my opinions here. This is not advice to do anything. That's between your brokerage firm and yourself. But I'm just sharing my opinions on what I'm seeing. All right, so that was another one there. And another thing I'm looking at is the gold, because when the fiscal deficits are running 2 trillion or whatever it's running, and there's no end in sight, and you got guys who, I don't know if they're going to get along very well down there. Something may happen here, either a deflation thing like is going on in China, or it could be an inflationary thing because they're going to have to print money in order to pay all these deficits. At any rate, gold is sitting pretty much, let me show you on a longer term graph. It's sitting right there around the red line, and the red line comes in at 2021. So you can see it's kind of been right around 2021 today. And that's one of the reasons I think it's right there. If it slips, it looks like 1950 could be in the cards. And if it slips even further, it could be going all the way down under here. Conversely, since everything is pointing up and we're above the purple, and so the bulls are controlling the market pretty well lately, right? It is possible that we could pop up. But where would we have to pop up to get the engine started? Here's where I see it. 2040, 2060. So you start blowing through 2040, 2060, and then the RSI, which is currently at 46, jumps into the 50s. And if we get above 2060 and we can get into the 60s on the RSI, then you could have an acceleration phase. So again, sometimes it's just good to wait and let the market tell you which way it's going to go, and then jump on the train that looks like it's going someplace. Because right now it's stuck in a kind of a quandary. 2000 area, the low here against the gold line, that's a pretty tight window. So that window will break at some point, and when it breaks, I think that's probably the way to play it, is go with the flow. But if we do start breaking underneath 2000, and then the purple line, and then we saw on the other graph 1950, there's a lot of people who bought gold in the last few years, thinking it's going to be going way up. And so if the people start liquidating out and the buyers go away, sometimes you get a pretty good gap. Either way. So that's how the gold looks right now. and I'd keep an eye on that. A lot of people got into the Bitcoin because they came out with the ETFs, right? Well, they bid and the halving, so they bid the thing up. So I was trying to warn people, listen, they've already bid this thing up to the roof. It could very well be buy the rumor, sell the fact. Well, it's exactly what it was. So let me show you some stocks that I talked to people about and gave my opinion on. Okay, this is a riot, and it's not exactly a riot anymore, huh? This thing goes from $9 up to $19. They come out with the ETFs, and we're trading at 10. You see, that's why hedging yourself, having a put insurance, these are things I talk to people about when I explain the uses and risks of options. Because again, I did get educated at the Options Institute in Chicago at the CBOE on advanced option trading. So, I have a certain amount of knowledge of how this stuff works. So one of the uses of options is not just gambling, it's to use it as an insurance contract or a hedge against what you own. And like any insurance, it has a period of time on it. So that would be your expiration date. And it has what it will do if something happens, and that's your strike price. So, I can explain that to you. And people who did take, when you get up like this, throwing a little put insurance, buy a long put against your big position here. It's a nice thing to have as the thing goes in the toilet, believe me. And nobody's going to be telling you to buy insurance when it looks this green, this sunny out. You know what I mean? But that's when the put insurance costs very little sometimes. All right, I'll give you another one that people were jumping all over. This is Coinbase, and same story, different nightmare. This thing goes up to 190 right before, they come out with the ETFs, and now we're at 120. Again, that's a pretty big hit for people. And MicroStrategy was another one that, people were, because this guy, he's fully committed, let's go with that. And on MicroStrategy, again, was at over $700 coming into the ETF, and now it's at 450. So again, there could be some support on these things. I'm not bad-mouthing them now. I was bad-mouthing them going into the big ETF thing because, again, it reeked of what? Reversion to the mean. It reeked of buy the rumor, sell the fact. And after decades of doing it, I kind of recognize these things from time to time. Nothing is for sure, but I thought the probabilities of the scenario that I was painting looked pretty good. That's what I was sharing with people at that time. Again, if you have any other questions, you can put it in the chat box. If you have any particular stocks you're looking at, or any markets, or any questions about the things that are going on. Okay, let's take a look at the 10-year note, because obviously it's important. And the 10-year note, again, this is why, if you're in this thing for a long time, you're always a little cynical. They announced in October that they think that cutting will happen in 2024. Well, people took that baton and they told everybody who was in anything, to buy into the bond market, right? And so, in the last 6 weeks, there's been a ton of people probably trying to buy into the bond market, looking for what? All these cuts, 175 points worth of cuts. And the probability on the March cut used to be at 80%, almost 90%. That's been cut in half. So the likelihood of a cut in March has been gone out the window. And the likelihood of 6 or 7 cuts this year, the way things are going, is also out the window. Why is that? Because unemployment's still at 3.7, even though you're hearing some job cuts here and there, still very strong. Wages are up more than the inflation rate. The consumer retail spending is through the roof. You've got GDP through the roof. The assets around the world, come on, through the roof. We're going to cut interest rates. For what reason is that? So you can try to create another inflationary bubble. So the bottom line is that, the yields have been rising lately. And of course, they could, come down again. If they do come down again, you've got a spot down here of 328, 330 on the 10-year. So if things really did turn down, and this area here, which is around 420, 416, 417, if this area does hold up and yields are going to drop, it might be accompanied by some surprise that we're not ready for yet, which would be something that shocks the economy, and kind of like, not like COVID, but COVID was a shock, right? And when there's a shock, the Federal Reserve views it as a license to obviously print as much money as they can and drop interest rates and do whatever they need to do to keep people spending money and happy, because 70% of the economy is consumer spending. They have no patience for people not spending their money, because without people spending all their money, this thing doesn't work. So, if you don't want to know that, China has a situation where it's consumer spending is 30% of their economy, or in the 30s. And when Japan was going great in the 90s, it was like 55 or 60%. So we're 70%. So, we have absolutely no appetite for everybody to start being fiscally responsible. And, the credit card usage in October was 5 billion. In November was 23 billion. And Lord knows what it's going to be for December for Christmas. So people are going on those credit cards. People are hitting the firm with the buy now, pay later. People are trying to keep pace with their spending habits and the higher inflation numbers out there. Don't forget, we were at 9% inflation, and they're talking about 3% on top of the 9. You understand? They're not talking about deflation. They're talking about inflation at 3% or whatever. But that's on top of the inflation we've already seen. So that's why when you go to buy stuff, everything is still very expensive, because what we probably need a little bit of deflation to bring the prices back down to normal a little bit. But that hadn't happened just yet. If the Fed keeps the rates at these higher levels, that could happen later in the year. Real estate, I mean, come on, who would ever think that you could take the real estate mortgage rate from 2.75 neighborhood or 2.5 up to 8%, and then housing prices wouldn't drop at all? Makes absolutely no sense. So obviously, one of the reasons is that nobody's selling their house because they've got the mortgage. But if the prices were to start slipping and the mortgage rates came down to 5, you could see a deluge of houses on the market, and that would change the whole dynamic of real estate from where it is today. One thing I've learned is that things change, and higher interest rates is generally not good for things that are based on debt. And obviously real estate in large part is borrowed money. So keep an eye on the bond market right now, the note market. Again, if it cannot get through 420, again, it could drop in yield again. And again, another place where there's a lot of support now on the 1-year graph is the yield staying above 390 and 4%. So again, where could it also be going? If it gets above that 416, 417 that I talked about, then you could go up towards here. But again, you also have to ask yourself, who's on the other side of the trade? When people are stampeding into the bond market, as they were after the Fed said they might be cutting rates next year, somebody sold those bonds, right? And they're generally the market maker. Okay, and the market maker can see volume coming in, and then he drops the prices, right? And then when he drops the prices, he takes in all the orders, and then when that dropping volume is dried up, it goes the other way. Okay, I'll give you on ESH here what could possibly be happening here sometime here in the first quarter. There is a stampede of people coming into the market, right? Stampede. Who's selling all of this? Because you need a buyer for every seller. Now, the public's not selling into this. So who would provide liquidity for all these people that are jumping in? And it would be the market makers. And if the market makers are the ones on the other side of the trade with all this volume and strength, they're going to raise the price very high so they can be the seller while we are being all the buyers, right? And once this volume were to dry up and this momentum dries up and sellers come in and the buyers have gone on vacation, that's how you get the sharper pullback. So this is one of the things I'm very much aware of, but I don't step in front of the freight train. But if I see the freight train is at a point like the crypto stocks were, okay, way up in advance, and obviously somebody sold all those crypto stocks when they're way up. In other words, Let's take a quick look so you get this point I'm trying to make. You know, the public wasn't selling Coinbase up here at 190. Okay, so somebody was. So obviously market makers, right? And they took all that volume in, all that get in before the ETF, get in before the ETF. Who was selling up here? The market makers. And now they're short up here. And of course, the public went long. And then what happens is that's how the market makers make their money. Because when the volume dries up and then the selling comes in, into a no buyer environment, it doesn't take long for them to get their money, does it? No. So again, I'm just trying to say this is something that I'm not worried about. It's something I'm cognizant of and keeping an eye on for the stock market itself. Because again, you know, somebody is on the sell side of all this buying, buying, buying. And again, if the Fed cuts don't happen, and if the earnings come in a little light, that would be the recipe, because again, valuations are very high again, very high, especially based a 5.5% Fed funds rate. The valuations are quite high. Companies could make a lot of money, and then that, of course, would justify the valuations, but that's not 100%. Okay, let's go over to the international markets, and well, I will tell you, I'll show you one other one that I thought was quite interesting. Let me show you Pfizer. Now, Pfizer is lousy. Let's get that off the, let's get that right on the books, huh? Pfizer is down here, way, way down. I'm going to show you the 20-year graph on it. And can you see the gold line comes in? And the last time it hit the gold line, it was a pretty darn place to buy, right? Right? So now the gold line comes in and the market can't get above it right now. It's at 30.45. So basically, you know, if we got back above 30.45, and if we ever get back above purple, Pfizer could be at a reasonably low price. Now, this also has been paying a dividend. So this is something you could get cash flow, as long as they don't cut or eliminate the dividend. You could get some cash flow while you're holding on to it. And it does have a low at 25 surrounded by higher lows. So it's something that I am definitely watching, but certainly not running down, waving a checkbook at. But this is where nobody wants it, out of favor. Sometimes this is where it's not a bad time to take a shot. Certainly it looked better here because it had purple rising and then it was right above purple. So it's not the same situation here. It's just something I just wanted to say I'm monitoring, not necessarily running down to buy. One other thing is a natural gas. RRC. This is somewhat interesting too. You know, these are ones that if things got going, you know, could have a lot of potential. Those energy ones I mentioned, if things really, if we go back to 80 or 100 on crude, believe me, those energy shocks are going to be something to wonder. Now, this is a natural gas here on Range Resources. Now, that trend to me still looks pretty darn good. And if it gets above 35 bucks and starts closing above it, I think it could fly. So the bottom line is I'm watching this one as well. And this is natural gas. And then basically on the 5-year graph, it's holding purple so far. So again, you can see if it gets above 32 and then 35, it would be hitting the open field again. And it's been doing pretty darn well, if you notice, ever since 2021. So it's not the worst company in the world here, huh? And on a 1-year basis, again, the gold line comes in right here. So I'm monitoring this very closely because again, it's come from 38 down to 29. And this is a place where it's really crunch zone, because if it breaks under here, you know, who knows? Boom, boom, boom. So this is a very much I'm watching on a ledge. There's a lot of them that I'm watching, they're right on the ledge, and either way it goes, it's going to be very interesting. All right, let me give you a quick thing on the international picture. You know, China is going around the world trying to get people to put foreign investment in there, and people are just not buying. Again, you got 16 to 24-year-old unemployment way into the 20% area. I find that very unnerving because you notice Yemen has 35% unemployment, and some of these other countries that are going, and obviously the Palestinians have plenty of unemployment. When you have a lot of unemployment and you got youth, you got a lot of people got time on their hands, and then that's when some bad things happen. So I'm very concerned that China's unemployment is that big. one way to get everybody to go back to work is to go to war. So that's why you have to be concerned about that. And of course, China's having a hard time getting their people to start spending money. Their consumer demand is bad. Anyway, look at this is the large caps, right? RSI is at 23 there, RSI is at 34 here. So there's a divergence down here. Might be worth taking a look because they may come up with a stimulus package that just cannot be denied. So be careful right here and keep an eye on it. There could be value down here. Baba, Baidu, JD, Tencent, all down here. Okay, so that's something I'm keeping an eye on because this is getting pretty darn cheap. I mean, it used to be at 52. There aren't things down here at 21. RSI down here was 23 and RSI here is at 31. So there's a potential divergence down here. And then, but you need to have things turning up or else, you just can't look, you can't get a big rally when everything is still pointing down. And even if you get a rally, it's going to be a false one if everything still points down. Okay. So bottom line here is it's getting very cheap and probably something's got to give. And that's not a good thing to say when you're talking about China, because if it gives the wrong way, it'd be a real problem. K-Web is the other one over there. And again, this one's same story, right? I mean, look at the 5-year graph on it. It's got room to come down if it wants to, but it's it's in a negative mode. And the 20-year graph again, way down here. So on a 1-month graph, you got gaps and gaps and gaps. You got a relative strength here at 21, and you got relative strength here of 26. So you got a divergence. So like I say, it can be darkest before dawn. If you like to dollar cost average into something and you think something is not going out of business, this is pretty inexpensive stuff down there. Some of the ones that have been better internationally have been Mexico. And you can see there that going back on a 5-year graph, Mexico has been doing pretty darn good, right? This is what nearshoring, reshoring, and all that stuff, right? So, this thing since the October lows, has been on the upswing. Okay, looking at another one is Japan. Japan's currency has lost half of its value. So, people who are concerned about the dollar's value or whatever, doesn't necessarily mean the economies have to do bad, but these are an exporting country. So the cheaper their currency, the cheaper the goods they export. But as you can see, this thing got bullish again at the lows of October, and it's been going, and it's still on the way. So this country has definitely been coming back up. Another one that I'm keeping an eye on, of course, is India. And India, obviously there's some manufacturing going over there, and this thing came down to 38, and now it's up here, so it's been doing very good. So those are a couple of countries that are on the upswing, and may continue because the world seems to be shifting towards them. More manufacturing into India, Apple trying to sell a bunch of cell phones over there, and then of course in Mexico, a lot more production down there. So they've got pretty decent stories. And again, the Japanese have got a good story because just so you can put this in perspective, I'm going to show you what I'm talking about on that Japanese yen. Now talk about a depreciation on your currency. I mean, come on, this thing has gone down 40% in a year or a couple of years, right? And so it's down here trying to make double lows, but I mean, that's a pretty big drop. And if you go to the 20-year graph, I mean, look, the thing's gone from 130 down to 60. So they've lost half the value of their currency. That's why they have inflation finally. And this is an opportunity if what they talk about is this year could be the year that they abandon or modify the yield curve control, YCC. And that's where they just keep buying their own bonds, just like the Fed was doing with QE, buy your own bonds, print money, buy your own bonds. And if they change that story and rates are allowed to go up a little bit, then this thing could scream to the upside a little bit. I'd be watching that for that, because you do have a low there with a 17 RSI, and look at the RSI low here is 34. So that's a divergence, and that's the kind of a divergence that could lead to a pretty good sized rally. So I'd be monitoring the yen for a possible move to the upside off of such depressed prices based on possibly some modifications in the yield curve control. Oh yeah, on the industrial metal side, if there's going to be infrastructure, you're going to have industrial metals. And basically, this is the ETF on that. And you can see it's starting to climb, climb, climb. And, sometimes after climb, it starts popping. Where's your RSI up here? Your RSI is at 56, okay? If it can break above 65, RSI goes into the 60s on its way to 70 or 80, this thing could have an extended move. So I'd be monitoring this, not yet, but it does have some potential. And if their infrastructure is going to happen, they're going to need, see it's holding here in the red line, which isn't bad. So if you blow out there and you get RSI popping, because RSI, is in the 55s, and you see RSI was at 64. So if you get RSI to blow through here, you get the prices to blow through here and RSI goes above 64, I would think that that would open the door potentially for something very significant in 2024 for metals and mining. So I just wanted to mention that to you as well. There's a lot of different sectors out there, and if you have questions on any sector, you could let me know, and I'd be more than happy to help you with that. If you have any other questions that you have on any stock or market, this would be a good time because I'm going to be wrapping up in a few minutes. So if you guys have any questions on a certain market or a certain strategy, or questions on how these weekly options work, and timing on the weekly options, because the weekly options are popular by the volume. The volume just speaks for itself. There are a lot of people playing them, and they're very risky because again, there's not much time on the clock, and if they go against you, they go to zero pretty fast. So that means you lose all your money on a long position pretty fast. So your timing is going to have to be very, very good if you're going to be successful on it. I'll give you some ones that I've done this year, just the markets, and I'll show you why I like doing it. We had Apple on the downside here, and then we flipped to the call side. Okay, so you can see there was a couple of good trades here in Apple. And then, these energy shares that I've just turned positive on, I have been very negative on, and I'll show you why. As you can see, this has been put city on Devon Energy, and you can see on Occidental Petroleum. These are all ones that I've been focused on. It's been put city on that as well, but I think there could be a turn happening here. Halliburton, these are your servicers. And you can see that's been put city and turning. And then we also had Schlumberger, which is really the Cadillac of the servicers. And even the Cadillac goes down in price though, right? But now it's on the upswing. Okay, and that's why last week, that's why we got keen on it. Okay, so that gives you, and then of course, we did jump on the PayPalers last week. It was going at 55, and all of a sudden it started getting bid up. And we said, what the heck's going on here? Because, the thing was down at 56, looking like garbage. And then all of a sudden it pops, and then it pops. So we go throw our hat in a ring. And then all of a sudden, if you use the 64 strike, because that's what I thought was a good, see this 64 number? I thought that was a reasonable place, because if it was going to bust out, it was going to bust out above that. So those things were going for under $1. And they obviously hit $4 here today. So, yeah. That's some of the things that I've been focused on, and that's some of the ways we try to time it a little bit. And again, when we're wrong, you lose the premium, and when you're right and you get good volatility, there's potential to it. So what I'm going to leave you with right now is this: again, I'm Jim, the Option Professor, and I'm inviting you to go to my website, optionprofessor.com, OPTIONPROFESSOR.com, and put in your information. And then I'm going to explain what I can do for you, which is I could educate you on the uses and risks of options. I can send you a link to the indicators that I have, and I can also go over any questions you have on any of the different option strategies, and I can share with you my opinion on all of them. And we can do this in an online meeting that we have one-on-one. And I know a lot of people are charging thousands and thousands of dollars and monthly $100 charges and all that. We don't do anything like that at all. I have a one-time only, low cost, very, very, very fair, and that's all we do. And then, of course, like I say, you can take advantage of my knowledge and experience to learn. And whether you're just starting out, I can work with you so we can start with the basics and build and build and build. Or if you're experienced, I can show you my angle on things. And if you're experienced and have humility, you understand everyone's got a certain thing that's different than what they're doing that could have some value. So that would be the reason to hear that one out. But I obviously follow all the markets. I'm knowledgeable on the markets. I'm willing to share my knowledge with you. You just got to go to the website, optionprofessor.com, and put in your information, or just email optionprofessor@gmail.com and go, hey, Jim, this is my name. This is my contact information. Give me a ring and let's go through what you could do for me. Because again, there's a lot of people out there, saying all these things, wonderful things, bad things, whatever, and charging all kinds of money and this and that. So, I think it's a refreshing way that I do things. And I think if you contact me at optionprofessor.com or optionprofessor@gmail.com, I think you're going to find this is way different. You're dealing with somebody who's way different than anybody you spoke to before. And I think you'll be very pleased with it. So again, a lot of things going on in the markets. I tried to cover quite a bit of it. If you have things I didn't cover that you'd like to talk about, that's what we do during our 1-hour session. You'll get the link to my indicators, which are very valuable in my opinion. And of course, I give you a full explanation on how I work with them. Again, optionprofessor.com and optionprofessor@gmail.com. Okay. This is Jim, the Option Professor, signing off. Have a great day, everybody. Good luck and good trading. We got the PC report on Friday. We got all kinds of other stuff coming up. You've got the Fed coming up next Tuesday, and we got a full moon on Thursday. So we got a full slate ahead of us, guys. Give me a ring. Give me ability to reach you, and I'll talk to you down the road. Have a great day. Thanks for being here today.